Good morning, everyone. My name is Christopher Vecchio, currency analyst with Daily FX. Today is Monday, January 13th. These are your FX headlines as we turn the page to North America, and it's a good thing that we're turning the page to North America for the British pound. It's been a rough session. Now, falling particularly hard against those Asian and Pacific currencies, the Australian and New Zealand dollars, the Japanese yen. It seems that the yield environment for the British pound is starting to weaken. In fact, as was the focus in our weekly forecast of the pound this week, we're noticing that the UK yield curve is exhibiting the same tendencies as the US yield curve did in that September to mid-October period, which coincided with U.S. dollar weakness, almost like the untapering of the belly, if you will. So maybe we're starting to expect to see some lower rate expectations coming for the UK. That's not a surprise considering we have a CPI print due tomorrow for December, expected to come in at 2.1%, below that 2.5% circuit breaker for the BOE's forward guidance. And in context of the BOE wanting to lower forward guidance, a weak inflation print tomorrow, or at least confirming inflation below the BOE's target, could give way for further dovish rhetoric from the BOE, thereby putting a halt on some of the pound's recent gains. Now, if we're taking a look at the pound, there are two currencies that could really unravel against as this yield curve exhibits this untapering behavior similar to the U.S. dollar. And like the U.S. dollar weakened against the Japanese yen and the Australian dollar, that's who we're looking for the British pound to weaken against if yields continue to step back. And so pound yen today is offering a break potentially below 170. We're seeing the uptrend from the November and December lows having been broken on Friday with that weak NFP print. Now if we get below this 169.70, 170 figure, we could have a more concerted near-term top in place that I'd put focus on a return to that 55 EMA on the daily chart, which coincides with swing lows in early December and again in mid-December, right near 166.60 today. If risk-on environment continues to pick up because we're seeing additional stimulus and easing potentially come into the market, or at least that's where the market's leaning, pound Aussie could be pulling back into a head and shoulders formation. The head is at 186.90, depending upon where you're measuring the neckline, either 182.25 or 181.60. We do see a target extending from 176.30 up to 177.60. That also coincides with the ascending trend line off of the March and October 2013 lows, so that would be a decent place to look for pound Aussie to bottom out if indeed this is a longer-term bull trend. So that's it for today. We are going to be keeping an eye on the calendar. It is a lighter week overall with the first pieces of significant data coming tomorrow, the form of UK CPI and US advanced retail sales. We'll keep an eye on those prints. If we do see a weak CPI for UK again, we'd expect some further pressure from the British pound. If not, if we do see CPI pick up, maybe we'll see a brief halt in what has been potentially a turning point for the pound in the beginning of January. Good luck trading today, and of course we'll be back with tomorrow's update. I'll be on Daily FX Plus tomorrow morning at 6 Eastern, 11 GMT for my weekly trading Q&A. Hope to join you there. Thanks.